Hey, what's up? My name is Mr. Alpha, and today we'll go over taxes. Taxes is a word that's loved and hated by many people. Well, really just hated by everyone except the government. Either way, the tax system can seem pretty complicated, so here's a quick explanation of taxes for beginners. No fluff, no BS. Let's jump straight into it. Part 1. What are taxes? Taxes are yearly mandatory payments you make to the government to fund things like roads, infrastructure, education, the police and military, welfare programs, and disaster relief. Basically, taxes are how the government pays for necessary public services that no individual is responsible for, like fixing potholes on the road or building schools. Part 2. Tax types. There are several types of taxes, like income tax, which is usually the biggest tax expense for most people and includes taxes on income from jobs and side hustles, or capital gains tax, which is tax on earnings made from investments in stocks, real estate, and other assets, or sales tax, which you pay almost anytime you buy something, or state taxes, which are paid to and controlled by state governments. For example, Pennsylvania has a flat 3.07% state tax rate, and North Carolina has a flat 4.25% state tax rate. Part 3. The progressive tax system. The US and most other developed countries use what's called the progressive tax system, meaning different levels of income are taxed at different rates. For example, let's say you're a single filer, meaning you're filing alone. This would be your 2025 federal tax bracket table. So let's say your yearly income was $80,000. This means the first $11,925 is taxed at 10%, the next $36,550 would be taxed at 12%, and the last $31,525, which is the remaining amount of income, would be taxed at 22%. So your total federal income tax bill would be $12,514. This means that even though your tax bracket is 22%, which is the highest bracket you pay, your effective tax rate is technically only 15.64%, which is your total tax bill divided by your total income. Many people get confused and think that earning more money could be bad, since it lands you in a higher tax bracket. But that's completely false, since only the top portion of your income gets taxed at that higher rate, meaning a salary increase is always a good thing. Part 4. Tax deductions. Tax deductions lower your amount of taxable income. A common deduction is business expenses. So for example, if you spend $5,000 on a camera, software, lighting, editing tools, and other business related expenses for your YouTube channel and it made you $20,000 of income, that $5,000 can be deducted. So instead of being taxed on your $20,000, you'd only be taxed on $15,000. This is why people try to connect their expenses to their businesses to reduce their tax bill. For example, if Dave opens a banana business and then travels to Italy on vacation, he could deduct the entire cost of the trip from his taxable income to reduce his tax bill if he can prove going to Italy was a business related expense, which it could be if, for example, he was going there to meet a potential banana business client. Although if Dave tries to connect unrelated expenses to his banana business, the IRS might investigate him, fine him, and at worst he could face jail time, so be careful. That's the basic idea of how taxes work, what they are, the different types, the system most developed countries use, and deductions. My name is Mr. Alpha and I'm here to teach you all about money in the markets. Give this video a like if you enjoyed it, and to learn more, check out the other videos on my channel. Until next time, peace.